Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets with a little market analysis, and then talk about some strategies that we could implement into our portfolio based on those assumptions we come up with. All right, so yesterday, pretty busy day, right? Yesterday, we had the FOMC meeting. I said, it's probably better 80% chance of a 75. Well, we got that 75 basis point hike. As a matter of fact, it was a concerted effort across the globe. It seems that everybody was raising rates yesterday. We even had Great Britain and Switzerland raised rates from negative 75 to negative 0.25. So negative 0.75 to negative 0.25, I should say. So a 50 basis point raise there, but still in negative territory. We did get the Great Britain to move their interest rate up to, I believe it was 1.25, I think it was, right offhand. I can't really remember right off the top of my head. For some reason, it's failing me. I'm looking at the other economic data there. Some things we did see out of China is retail sales were a little bit better than expected. But then we come into today and see again that our economic data is really starting to show the weakness here across the board. We got retail sales coming in at negative 0.3%, expected to be a positive 0.1%. And they revised last month's number down to 0.1%. So revision down, making that headline number even worse. Now, when you strip out some of those more volatile aspects like retail sales, we're talking about, you would strip out automobiles. That number comes in at 0.5, expected to be 0.7. And again, revision to last month's number down to 0.1%. So all of these headline numbers for retail sales, not looking too good. Already, we're seeing the consumer pull back on spending. First time we've seen Empire manufacturing. Remember, we talked about the economic data points coming out of Philly Fed. That number did come out negative this week already. So that is the first one of these manufacturing numbers that we saw go into negative territory and continue there. Now, Empire State Manufacturing, first time we've seen go into real negative territory there. And actually, yes, Empire, sorry, let me get my stuff straight here. Folks, Empire Manufacturing was the economic data point that we saw come in negative last month, came in negative again this month. That was the first manufacturing number that we were saying come in negative. Now, Philly Fed coming in negative at negative 3.3, expected to be a positive 5.1. So that is a huge miss on the headline number there. Wholesale inventories, wholesale sales out of Canada actually came in at negative 0.5. So we're seeing a lot of these retail sales numbers, the manufacturing numbers really start to pull back here. I think with a raise of 75 basis points yesterday with Fed, that's going to cause you and I to start crimping our spending. That's their mandate. When they're raising interest rates, they're trying to slow our spending. They're trying to get us to become savers. And when we become savers, that will help taper some of this inflationary pressures, because if we're not buying as much, we're not fighting over the same products and driving those prices higher. So with that said, Fed trying to get us to pull back on our spending, that is what is going to slow the economy even more. Not just that you and I are worried about inflation, but the fact that you and I are worried about how we're going to spend our money going forward. That said, we saw unemployment claims ratchet up a little bit, 229,000, expected to be 215,000. A lot of folks are saying they don't really understand where these unemployment claims are necessarily coming from, because we aren't necessarily seeing the layoffs in the manufacturing sector or even in corporate America necessarily right now. But what we're seeing here are the folks coming off of the sidelines. I've talked about this many times, the discouraged workers, when they stop looking for unemployment and just sit on the sidelines, they don't become a statistic any longer. So now we're seeing those folks come back into the market looking for jobs. And that's why we're seeing that ratchet up. Building permits. When we're talking about houses, we're looking for building permits and what these folks are thinking about going forward. They didn't slow down too much. 1,695,000 permits pulled, expected to be closer to 1.78. So yes, we did see a bit of a pullback, but they are building on those permits. We've got 1,555,000, expected to be 1,700,000. So both slightly lower on the starts and on the permits, but we're still have a supply shortage here for housing, if you will. That's another reason why we've seen housing prices drive higher, is that shortage of inventory. Same idea goes there, supply and demand. If there's no supply, then there is demand. We're going to see those prices drive higher. So that's what we've been seeing across the board there. Another thing we did see that we didn't have an opportunity to talk about yesterday before I was rolling out of here was crude oil inventories. We're seeing here with crude oil, let me find, give you guys a chart here. Crude oil inventories came in a lot hotter than expected. We were expecting a drawdown of close to 2 million, 2.3 million drawdown. We got a build of 2 million. So in line with last month, seeing positive gains here. That's what we got, a little bit of a pullback here in crude oil. It looks like the lack of demand here for crude oil is bringing this market down a little bit. That's probably due to those higher prices. Everything I see on social media is people taking pictures of the gas pump when they fill up, and it's actually pretty atrocious, to be quite honest, to see that much money going to one place and destroying that velocity of money. One thing that's going to get us out of this, folks, is you and I, really, and our demands of the government to open up the oil, start pumping, release these permits that folks have been clamoring for, allow some of these older refineries to go back online. Remember, we talked about a lot of the EPA things that are going on around some of these refineries. Yes, we do have refineries. We have capacity utilization. We can't reach 100% capacity utilization. Why? Because we don't have all of these refineries online. So a couple of little tokens towards the market saying, hey, we're going to allow these permits to be released. We're going to allow capacity utilization to increase. That will bring this market and crude oil way down. It will probably chop it close to in half, which would be great for the economy. We would absolutely see inflation ebb almost immediately. So when everybody's talking about all the tools of the government and inflationary pressures, the only thing that the Fed can do is raise and lower rates, folks. That's really not a great tool to use, especially in this day and age. We have to think ahead and think outside the box here. And what is the key thing that is driving inflation right now? To me, it is crude oil and EVs, to be honest. The EVs are driving the inflation in and around all of the metals. And then we have crude oil driving higher. Well, it's harder to get metals out of the ground when we're driving these great big huge trucks at probably 3 times the cost of what they were looking at a couple of years ago. Remember, the costs are driving higher not only because of gasoline, but we have older infrastructure with companies. Folks are buying used cars, used trucks, 100,000 miles. Those cars are usually the ones that start having the big maintenance problems. We're seeing that in these companies where their costs to maintain their fleets are really starting to drive higher, even with this crude oil. And the crude oil just not helping anybody's business whatsoever. Bonds here did get a bit of a relief rally off of the 75 basis point move, but then pretty much after the close, Powell started talking about we might go 75 again. So bonds, everybody else today starting to dissect what the Fed said. They're basically going through all of the notes, highlighting how wordings changed from the last meeting to this meeting. All of that stuff is what's going to be happening for the next couple of days here. With that said, I'm expecting gold to start making a move to the upside. I think that folks are going to see inflation, realize that they cannot just hold on to cash and keep up with inflation. They're going to start putting that money to work. But I do feel like folks are raising cash right now. Bitcoin, we're going to be looking at Bitcoin as an opportunity here today in the video that I'm going to be doing for a webinar on the long straddle. Yeah, it's pretty difficult right now to find an opportunity to implement a long straddle. I'm going to go through why I would say kind of stay away from the long straddle today, but I may have one opportunity that we can at least talk about that's related to Bitcoin on a pop or drop type of move here. I think Bitcoin's kind of building up a little bit of tension. I talk about when the rubber band winds up really tight, kind of trading in a sideways pattern, it's building up energy and it's going to pop in one direction or another. That's the time to implement a long straddle. And I think I've got a pretty good example of that today. So make sure you check it out, subscribe, hit the bell so that you guys can participate in that. We're on Facebook and on YouTube. So if you guys want to comment, make sure you're picking your right social media platform. I am always keeping an eye on the comment section, folks. So if you want to chat, drive the commentary or drive the content, I guess, make sure you guys are commenting, because I'm keeping my eye on it and want to make sure you guys get what you want out of this video as well. All right, NASDAQ engulfing yesterday's rally, making it look like a bottom yesterday, but today with the engulfing pattern, the realization, folks, is that, hey, we're going to probably see inflation here for a long time. We might be back to the 90s with inflation here very shortly. And I truly believe that that's probably where we're going to go, unless we can get a real change in the paradigm around crude oil here in the United States. Dow Jones Industrial Average, again, a better example, though, of the engulfing pattern that we're seeing from yesterday's rally. That completely erases any type of bottom that we were looking at there. I thought, we were looking at on, I think it was Tuesday, we got this consolidation pattern. Yesterday, the FOMC releases their statement. Market really kind of got a pop there. Today, basically, the hangover is starting to happen. People really starting to realize that this is a reality for some time. So as you can see, drawing back to some of these Fibonacci numbers here, I drew this one in, haven't written in what it was, but I do believe it's to this high, obviously, but I think it also went down to the pandemic low there. Let's just draw it out and see where we are on this one. Yes, it was the pandemic low. I drew it into a pandemic high to the pandemic low to get some of these. I'll probably change some of those colors so it's not nearly as confusing. But then you can see I also drew it in as the pandemic low to the recent high here to get us some Fibonacci's for the retracement there. All right, so I'm going to play around with these lines there going forward, but it is a little bit messy. I probably should clean up some of these. Looks like right now, though, 3,500 is where the E-mini S&Ps want to go as their next stop. The next thing would be then that, 3,400, which would have been close to that pandemic high. So we're going to be looking at these two levels because when you're doing a retracement off of those, that you're going to probably find some of these levels coming back into line here. So I would be looking for those levels right now, especially with the way the market's acting for the this day session. You can see overnight when everybody else raised rates, it's like this is a serious problem, and the market started rolling over. Now, with that said, one of the things that I'm going to be looking at is not BlackBerry. I was just flipping through some charts here, is NVIDIA. You guys, if you had to play Bitcoin on a little bit smaller scale and maybe a little bit less risk, I think that NVIDIA is one of those good ones to trade because it really is beholden to the cryptocurrency space. Now, all of their products are being used in the mining operations, building these little servers to run the program to get the Bitcoin and run the algorithm. So this is driven by the price of Bitcoin. As Bitcoin goes higher, the demand for their products is going to be there. But as Bitcoin pulls back, then we see all these folks kind of dump their mining operations on the open market. That's a good place to get a pretty cheap computer per people, is when you get those cryptocurrency guys dumping their servers. They have some of the fastest stuff in those servers. So you can get them on the cheap a little bit and get a really nice computer from that. I have a friend that actually builds those types of computers. So we're going to be looking at an opportunity here in NVIDIA on trading around this Bitcoin move. I talked about it. It's either going to pop or drop. I think people are either going to start putting money to work and it's going to go to Bitcoin and gold, or they're going to just let these things fall out of bed, especially Bitcoin, and maybe start investing in gold or something like that. So Bitcoin right now, I don't really know. Is it going to pop or drop? That's why we want to implement something like a straddle, a long straddle. I'm going to go through those rules. I'm going to go through what I see the strike location as the best opportunity to make money with these types of strategies, and what you should be paying, the volatility, all of that stuff. We'll go down to the gnat's ass on this stuff for you. All right. That's about all I got for you. Check it out. Don't forget to subscribe, hit that like button for me if you will, and Don't forget, we are on Facebook and YouTube. We're streaming everywhere. So if you want to comment, pick your platform. All right. Can't take that. Take it easy.